Hey everyone, and welcome back to the Valencia Property Podcast. Should you buy a Spanish property through a company? Well, spoiler alert, probably not. But before we dive in, I just want to mention that today's episode is sponsored. Yes, we finally have a sponsor. It's sponsored by Paella, or as you might know it, Paella. Yes, the dish. Paella wanted to sponsor us because, and I quote, and this is the dish speaking, "We've been bringing people together around a shared pan for centuries, and apparently that's the whole philosophy about community and Spanish living." Fair point, Paella, fair point. Now today we're tackling a question I get asked all the time. Should I buy my Spanish property through a company? Now I know that there are plenty of financial advisors, especially in the States, and investment companies, especially in the States, who'll tell you that setting up a limited company is the smart, sophisticated way to hold property. But here's the thing. When it comes to Spain, that advice is usually wrong. And not just a little bit wrong, but potentially very expensively wrong. So I grabbed a coffee with one of our favourite Spanish attorneys, Javier Hernandez, and we shot the breeze about buying property in your own name or in a company name, and why buying in your own name is almost always the best option for everyone. However, before we start that, we've also got another section in today's podcast, which is about financing your Spanish property purchase through a Spanish mortgage, and we've got more information about that coming later. Let's start though. Should you buy a property in the name of a company or your own name? First up, let's talk about money, because setting up and running a company isn't cheap. When you form a property holding company in Spain, you're looking at notary fees, registry fees, initial share capital just to get started. But that's just the beginning. Every single year after that, you've got accounting services, annual tax filings, and legal compliance costs. Even if your company owns just one small apartment, you still need to file corporate tax returns and annual accounts. That usually means hiring an accountant because, trust me, you don't want to tackle Spanish corporate tax law on your own. All these costs seep directly into your investment returns. Compare that to buying as an individual. It's straightforward, low cost, and you avoid all the corporate administration overhead. Here's my rule of thumb. If you're just planning to buy one property, maybe even a couple of rental properties with modest income, the cost of running a company will probably wipe out any benefits you were hoping for. And sometimes the cure is worse than the disease. Here's where it gets really interesting though. When you hold property through a company, you actually lose access to some pretty generous tax breaks that are only available to individuals. Let me give you an example. If you're over 65 and you sell your main home as an individual in Spain, you get total exemption from capital gains tax. As long as you've been living there for 2 years, that is. That's huge. But a company? A company can't have a principal residence. It's not a person, so it can't claim that exemption. Any profit the company makes from selling property gets taxed at the full corporate rate. No special relief, no exemptions. And here's something that catches people out. If you set up a company to buy a vacation home that you use personally, the tax authorities might well require your company to declare rental income as if you were renting it from yourself. Yeah, you heard that right. You could end up paying tax on a property you own for the privilege of using it yourself. If you owned it in your own name, no such problem. The next bit is the big one, especially if you're thinking about rental properties. As an individual property owner in Spain, you may qualify for some tax rebates. You may be able to offset the first part of your income because if you're only earning that in Spain, your first 5,500 euros is a personal tax allowance, for example. So you don't pay anything on that when you do your Spanish tax declaration. It's one of the best perks for landlords in Spain. But companies? They don't get this. Not even a little bit. A property company pays the standard 25% corporate tax rate on all its rental profits. Using that same example, 10,000 profit means 2,500 in tax for a company versus potentially just a few hundred euros for an individual in a lower tax bracket. So unless you have a massive portfolio, and I'm talking 8 or more rental properties held for over 3 years, which qualifies you for some special regimes, a company structure just doesn't make financial sense for rental investments. And here's something else to consider. Unwanted attention. The Spanish tax agency, otherwise known as Hacienda, keeps a very close eye on property holding companies. They know that some people try to set up companies to minimize taxes on personal assets, and they're actively looking for it. If your company is classified as what they call an entidad patrimonial, basically a passive entity that just holds assets without running an active business. You face stricter rules and you might lose access to various corporate tax benefits. Tax inspectors will check whether you're using company property personally. They'll scrutinize your expenses. They'll make sure you're not mixing personal and company finances. It's a level of scrutiny that most individual property owners never experience. And don't forget about wealth tax and inheritance tax. These personal exemptions you might enjoy as an individual, like the primary home exemption from wealth tax, might not apply when a property is held through a company. It adds layers of complexity that can come back to bite you. And talking about complexity, there's the exit problem. Let's talk about what happens when you want to sell or transfer the property, because this is where company ownership gets really messy. You basically have a few options, and none of them are great. Option 1, the company sells the property. The company pays 25% corporate tax on the gain. Then, if you want that money personally, you face a second tax hit when you take it out as dividends or liquidate the company. That's double taxation and it hurts. Option 2, you sell the company shares instead of the property. This avoids some of the corporate tax, but good luck finding a buyer who wants to take on your company with all its history and its potential hidden liabilities. Most property buyers want the property, not your corporate structure, because if they buy your corporate structure, it's going to cost them more every single year. Option 3, transfer the property from the company to yourself. Sounds simple, right? Wrong. It's treated like a sale with the associated taxes and complications. So if you've got a property worth $300,000, for example, and you transfer it to yourself from the company, that's a sale. That's 10% tax. That's $30,000 extra. Compare all that complexity to just selling a property you own personally. One level of taxation, straightforward paperwork, done. And if you're thinking about inheritance planning, your heirs inheriting company shares is way more complicated than them inheriting property directly. Those generous inheritance tax reductions for a primary residence, they don't apply to company shares the same way. So here's the bottom line on the company question. Unless you have a very specific, complex situation with a large property portfolio and specialized tax advice, you almost certainly should not buy property through a company in Spain. And any company that tells you should is basically wrong or just looking for some commissions. Limited companies are for running businesses, not holding real estate. Despite what some advisors might tell you about sophisticated tax planning, there are no magic tax advantages, just extra costs, extra complications, and extra headaches. My advice? Keep it simple. Buy in your own name. It's cheaper, safer, and you actually get to enjoy those tax benefits that Spain offers to individual property owners. And if you've already made the mistake of setting up a company for your property, consider liquidating it sooner rather than later. Yes, there will be some costs to unwind it, but you'll save money in the long run by avoiding those ongoing maintenance costs and potential tax issues. So that's it. Should you buy a property in the name of a company? I think you know what our opinion is. You want to go and do it? Well, you do you. It's not a great idea.
Valencia's calling out to me.
And then we get onto the second part of today's podcast, and this is equally important because this is all about financing your property. And if you're a new setup company, you're not going to be able to. Let's switch gears and talk about mortgages in Spain. Mortgages in Spain as a foreigner are important because once you've decided to buy in your own name, not in a company name, remember, you still need to figure out how to pay for it. And for this section, I've been working with our mortgage partner, Mortgage Direct, who've been helping international buyers finance Spanish property since 2006. They're fully licensed by the Bank of Spain, and they've shared some really valuable insights about what foreign buyers need to know. I had a chat with Bocena, and she told us the following. The Spanish mortgage market for international buyers is definitely accessible, but it works differently from what you might be used to back home, wherever your home is. And understanding these differences can literally save you tens of thousands of euros. First things first, mortgage planning in Spain isn't just about getting the lowest interest rate. It's more complex than that. You need to think about which currency you're earning in, what loan-to-value ratio works for you, and how exchange rates might affect your monthly payments over time. Here's what I mean by currency considerations. Let's say you're British and you're earning in pounds, but you're taking out a mortgage in euros. If the pound weakens against the euro, your monthly mortgage payment effectively gets more expensive. It's a risk you need to factor in. The smart move is to work with someone who can help you assess this exchange rate exposure and potentially match your mortgage currency to your income currency where possible. Now, here's something interesting. The loan to value ratios in Spain for non residents are typically more conservative than for residents. You're generally looking at around 60 to 70% loan to value as a foreign buyer, which means you need a deposit of 30 to 40%. That's a bigger chunk of cash than you might need in other countries, so plan accordingly. And don't forget the 15% costs on top of that. But here's the good news. Working with a licensed mortgage broker in Spain can make a huge difference to your bottom line. And I mean a massive difference. Let me give you a real example. Imagine you're buying a property for €650,000 and need a €455,000 mortgage over 20 years. If you go directly to a bank, they'll rub their hands and give you the worst deal possible. You might get offered a fixed rate of 3.1% with a 1% arrangement fee and early repayment penalties. Your monthly payment will be €2,546. But if you work with a good broker who has relationships with multiple lenders, they may secure you a rate of, let's say, 2.5% with no arrangement fee and no redemption penalties. That drops your monthly payment to €2,400 more or less. But at the same time, it means when you sell your property and get rid of your mortgage, you don't have to pay any costs. Let's do the math on that. You're saving €135 a month, more or less, which is about €1,600 per year. Over 20 years, that's over €32,000 in interest savings alone. Add in the $4,550 arrangement fee you didn't pay, and you're looking at nearly $37,000 in savings. Even after paying the broker's fee, you're still pocketing over €33,000. And here's the kicker. You also have no early repayment penalties. So if interest rates drop in 5 years and you want to refinance, or if you want to sell the property, you can do so without getting hit with penalty charges that can run into thousands of euros. The key is to work with a broker who's properly licensed by the Bank of Spain. Regulated, which means transparency and accountability. And they also have access to preferential rates and can negotiate away those nasty arrangement fees and early repayment penalties that banks love to include. A few other things to keep in mind about financing in Spain. The European Central Bank's rate policy affects Spanish mortgage pricing, so fixed-rate mortgages can offer stability if you're worried about rate increases. Mixed-rate mortgages are also popular, where you get a fixed rate for the first few years, then it switches to variable. Each option has pros and cons depending on your situation. Pro tip here, go for fixed rate at the moment because you'll get a really good deal and you don't have to worry about any rises in the future. And remember, that tax implication we talked about earlier with company ownership? Well, your ownership structure affects your mortgage options too. Individual ownership is cleaner and gives you more straightforward financing options. In fact, it might give you financing options, whereas with a company structure, you won't have any. The bottom line on financing: don't just walk into the first bank you see or accept the first offer. Talk to a licensed broker early in your search and get a pre-approval, ideally even before you start looking at properties. You get pre-approved so you know exactly what you can afford and you'll be able to move quickly when you find the right place. And in the current market, you need to. Financing smartly can save you as much money as making the right tax decisions. It's all part of the bigger picture of buying property in Spain wisely. So there you have it. 2 crucial pieces of the Spanish property puzzle. First, avoid the complexity and costs of company ownership unless you have a very specific need for it. And second, approach your financing strategically with professional help to maximize your savings.
City of arts and ancient kings. Underneath those Spanish skies.
Both of these decisions, ownership structure and financing, can literally make or break the financial success of your Spanish property investment. Get them right and you'll save tens of thousands of euros and avoid countless headaches. Get them wrong, you could be paying far more than necessary for years to come, and you could have a permanent headache. And as we've been speaking of properties, let's look at a featured property. I want to tell you about an exciting new listing that's just come up on Stepping Stone Rentals. It's called The House of Houses, and it's located in La Cañada. This is a fantastic medium-term rental option if you're looking to experience the area before making a purchase decision, which, by the way, is always a smart move. Daily rates start at €115, multiply that by 90 days, and you'll get your cost for a 3-month stay. You can stay up to 6 months in this one. If you're thinking about relocating to Valencia or want to test out living in the La Cañada area in Valencia suburbia, this could be the perfect place for you. You can find all the details and photos at steppingstonerentals.com. Just search for the House of Houses or property number 5072. And if you're interested, reach out to us completely without obligation. It's a great way to get a feel for Spanish living before you take the plunge into property ownership. And it's a great base to actually start looking for your property. Now, before we sign off, I want to go back to our blogs. And firstly, I want to revisit one of our most popular blog posts from back in 2023, all about work-life balance in Valencia. Because if you're thinking about moving here, this is something you really need to understand. One of the main reasons people relocate to Valencia is to escape the hamster wheel. You know what I'm talking about. That feeling of constantly being on, working to survive, checking emails at midnight, and never quite being able to disconnect. Our clients, especially those from the US and UK, talk about burnout. The pressure always to be available. Jobs that eat away at everything else in life. Here's what's different about Valencia. There's still a thick line between work and personal time. Yes, the Americanization of work culture is creeping in everywhere, but Spain is much more laissez-faire about this. When the working day is over, you cut the cord. No keeping your work phone on, no thinking about projects at home. And here's something that surprises many newcomers. Leisure time doesn't usually involve workmates. It's about family, friends, neighborhood activities, and social clubs. The weekend is absolutely sacred here. Much of the week is spent planning what you'll do on the weekend. The family events, the paella meals, the mountain hikes, the cycling trips. Leisure is taken seriously, and it's seen as essential to decompress and recharge. Now, I'll be honest with you. Achieving this balance as an immigrant isn't automatic. You need to make the effort to integrate, learn Spanish, join intercambios where you can practice the language and meet people, get involved in clubs that interest you, maybe even buy some tight-fitting lycra and join a cycling group. You'll learn useful Spanish like pinchazo, puncher, while seeing amazing countryside. Valencia empties at weekends as people escape to the countryside, their villages or the coast. And then there are the fiestas. Oh, the fiestas. You can find one somewhere in the Valencia region almost every weekend. They usually involve huge paellas, copious amounts of alcohol, music, and quite often bulls running around. Some last a day, some last a week. That's how people here really let loose. The key to getting to know your neighbors and building your community is be open, make an effort to speak Spanish, be friendly. People are naturally curious about why you chose Valencia. And when you tell them how great their city is, how great their region is, how great Spain is, they'll like you even more. If you want the full deep dive on this topic, head over to valenciaproperty.com and search for our work-life balance article from August 2023. However, we have put the link in the show notes. It's packed with practical tips on integrating, finding your people, and truly embracing the Valencian lifestyle. And speaking of blog posts, our latest one came out last week, and it was all about new builds and new neighborhoods. I want to tell you all about it because it's good. This one got a bit spicy, I have to admit, especially when people said how much they hate this type of building. Have you noticed those identical looking apartment blocks popping up all over Spain? White and black striped facades, small windows, glass balconies. They've been nicknamed zebra blocks, and there's even an Instagram account tracking them, Bloque Zebra, with over 15,000 followers who've documented more than 1,000 of these buildings across Spain. Here's the thing about zebra blocks. They're basically the fast food of real estate. Same building, any city, any climate. They're designed to look good in property listing photos, not necessarily to live in. Everything pretending to be something else. Artificial grass, vinyl flooring pretending to be wood, ceramic trying to be marble. As one architect put it, the zebra isn't designed, it's processed. But beyond just criticizing cookie-cutter architecture, the blog post asks a really important question. How long does it take for a neighborhood to actually develop? And the answer might surprise you. It's about 20 years. Think about what a neighborhood needs to really function. You need shops so you don't have to drive everywhere for groceries. You need bars and cafes for that daily coffee ritual. You need restaurants, amenities like gyms and social clubs, green spaces for those 9 million Spanish dogs, kids' parks, safety from having people around, good public transport, and most importantly, neighbours and that warm feeling of community. In the blog post, we look at Valencia's neighbourhoods that were built before the financial crisis and which ones are actually thriving now. The City of Arts and Sciences area has matured nicely, especially after the Aqua and El Soler shopping centres opened. New Campanar and New Benicalap are vibrant with families and communities. The top end of Melilla near Ruzafa has really come alive. But then there are areas like Las Moreras, Zebra Central, where it's still early days and it might take another 20 years to really develop that neighbourhood feel, if it ever does. Our conclusion in the post is pretty straightforward. Buy in areas where the neighbourhood is already established. You come to Spain for what Spain is, the social fabric, the street life, the community. Don't wait around hoping that a new development will eventually get a greasy spoon cafe and some non-chain shops. Buy where there's already life. Leave the new stuff to people who want a bit of bling. If you're thinking about new builds in Valencia, or if you're just curious about where the city is developing, check out the full article at valencia-property.com. It's called New Builds and New Neighbourhoods in Valencia, and it's definitely worth a read. And of course, we've left a link in the show notes. We even included a guide to suburban developments and those trendy cube houses that look like Minecraft designs. And that's it for today's episode. Thank you to Paella for sponsoring it. And you noticed I got a couple of mentions of paella in the actual thing. So it's like working in the back of your head to go and get some paella this lunchtime. If you found this helpful, please subscribe and share it with anyone thinking about buying property in Spain, and especially Valencia. And if you have questions about your specific situation, always consult with a Spanish tax advisor or a lawyer who understands property law. Most of them will tell you, don't even go near a company structure to buy a property in Spain. Until next time, happy property hunting, hopefully with us. And remember, sometimes the simplest solution really is the best one. Why complicate your life? Thanks for listening.